Hello, friends. I hope the markets are treating you right and you're learning a lot about what I have to tell you in my videos. I'm Vijay Bhambwani. I've been trading these markets since 1986, and through my videos, my social media posts, I love to share whatever little knowledge I have gained from these markets without expecting any cost or fees from my online family. So, in this video, I want to talk about a specific topic that many of you have been telling me to discuss since weeks, especially since I have been putting up the Bank Nifty and the Nifty 50 tick by tick, comma separated value or CSV file on my Telegram channel, which is compatible with Microsoft Excel. Now, the beauty of that file is that it logs each and every transaction with a unique timestamp in hours, minutes, and seconds. And every transaction that is logged on the exchange is shown separately with traded volumes. Now, what does this tick by tick file tell us? How important is it? And how to make sense and sensibility out of this data that you have at your hand. Now, first of all, a lot of you have asked me questions, basic questions, and I can completely identify with them. Vijay, where do I get this tick by tick file? Now, first things first, it's not going to be available from your mobile trading app. It's not going to be available from your Android or Apple handheld devices. This is a pure function of full-featured desktop trading terminals. Now, a desktop trading terminal will invariably have a lot more things to offer you as compared to a handheld device, because these handheld devices are just basically designed to allow you to trade, transfer money to and fro from the broker and to the broker, and just about be functional. Do all trading terminals provide you this tick by tick data? No, they don't. Especially the web browser based applications do not. It's the executable programs that give you, and particularly speaking, Odin and a couple of other broking firms that are non-Odin based offer you this tick by tick facility. How do we get it? Just click on the stock or index that you want this tick by tick file for, and right click on the security. You have a drop down menu, and there you have it. You have the option to view the tick by tick data. Now, once that you've got it, what do you do with it? On the tick by tick window, right click on it and say save as CSV file or maybe Excel file depending on your broker. What if your broking arrangement, the firm that you're dealing with, does not have a tick by tick file available to you on the desktop trading terminal? Well, I'll tell you what. Depending on how your relationship with your broking firm is, your relationship manager or your RM can help you get this file. It's free. It doesn't cost them anything, but yes, there is time involved, and you are telling them to go an extra mile, and that, like I said, depends on your comfort level and your working relationship with your relationship manager. You've got this file. How do you use it? Now, a whole lot of WhatsApp forwards come to me in the morning, the Suprabhatam ones, good morning ones, loaded with worldly and spiritual wisdom. Couple of them are repetitive in nature. They crop up on my WhatsApp and inbox terminals once in a couple of months. And every time I see them, I am reminded of one fact. And the loaded one is, don't tell me how you think about me. I will decide from your actions towards me as to what you think of me. This kind of reinforces the old saying, actions speak louder than words. So this tick by tick file cuts through all that smoke screen, cuts through all the jargon and the lies, the mistakes, the mistaken notions, and the deliberately planted news that exists in the public domain. Because you're basically seeing what people are doing. And to do something, you require financial capital, you require emotional and mental capital. Now, only when a person is committed to a trade will he actually go out there and do it. And this is what we are doing. The hardcore action is what we are deciphering here. Now, take a look at this 15-minute chart of the Nifty of 10th of January. That's very recent, right? On 10th of January, on Friday, the Nifty opened at 23,572 and closed at 23,437. That's a good enough loss at the end of the day. And the high made on Friday, and that too early in the morning, at 23,596 is something we are yet to see, which means something has happened during this day at the higher levels, and that has resulted in such heavy selling that bulls have not been able to absorb the supply available at higher levels, and unless they absorb the overhead supply, a rally past this point is not likely. Now, how do you get this file if you want to see it right away and you don't have a brokerage terminal that gives you this file? It's very simple. I provide it only on my Telegram channel because that is the only platform that allows me to upload any file format as an attachment. Whether it's a PDF, a graphic, or a movie, or an Excel file. So please connect with me on my Telegram channel. My contact coordinates appear at the fag end of this video and in the description below this video. And download the tick by tick file of Nifty of 10th of January and note what I'm saying in the next couple of minutes. When you open that file, just highlight all the first column is the date and time stamp. What you have is a detailed calendar date plus time in hours and minutes. I want you to modify it so that you cut out the date and just modify it to hours, minutes, and seconds. Now, what you will see is go right from the bottom. That is where the first trades are logged. At the top are the last few trades. You will see something peculiar. Do remember the price has opened high. It's closed low towards the end of that trading session, and the intraday high of that session has not been seen yet. Start right from the bottom. That is where the first trades appear. At the top are the final trades of the day. So scrolling down, what we see at 5 seconds past 9:15, you saw a big lot of Nifty trading 18,400 units at 23,643 levels. All right. Then at 9:15.06 seconds, 19,600 units traded at 23,625 rupees. Then 9:20.16 seconds, 14,025 units were traded at 23,655 levels. So far, the price seems to be holding steady and firm. Now here starts the fun. At 9:25.49 seconds, you saw 4,225 units being traded at 23,631. Price has started coming down. At 9:26.39, 5,600 units traded at 23,625, a loss of 5 or 6 points. Now at 9:27.16, 23,025 units were traded at 23,621 levels. And now the acceleration in declines. 9.29 and 49 seconds, 2,900 units sold at 23,592 levels. The 23,600 level on the Nifty is gone. It's violated. Now at 9:30.51 seconds, 5,050 lots are traded at 23,603. The price has just about managed to come above the 23,600 threshold. Now at 9:33.39, you saw 11,350 units traded at 23,554 rupees. This is a big slam dunk. You've seen a decline of 49 points in 3 minutes flat and at good volumes. Remember 2,900, 5,000 and suddenly 11,350 units. Now this is a doer of deed telling you something. This is what I mean when I tell you that the market talks to you. In numbers, in numerical terms, in mathematics, it is we who have to learn to listen to the message of the markets. I could go on and go through right up to 3:30 p.m. and show you data points where high pressure selling has taken place. But you have the pudding available to you. You can test it out. You can taste the pudding for yourself. The data file is available on my Telegram account. And this is where HNIs, high net worth individuals, smart money, and institutions were pressing sales on large volumes. These levels, unless they are overcome, will prove to be overhead supply. What is overhead supply? Levels at which retail guys are stuck at higher levels in purchases. Whenever the price goes towards their average purchase cost, these guys are waiting to sell eagerly and then provide resistance by way of their sales. Can the price go past this level? Yes. It's just that the bulls will have to absorb all that selling that is coming from the retail guys, the overhead supply. Unless the overhead supply is absorbed, a fresh rally is not possible. Now, this is what will not show on moving averages, on your technical analysis charts, or anywhere else. This is something a real world trader has to maintain his own data digitally in his data banks. Your next question, and I'm trying to second guess here, Vijay, how many days of data should I need to store? Because the files are large. There are more than 50 or 60,000 transactions on the headline indices. I completely agree. Remember one thing. In today's day and age, real estate in electronic space is not very expensive. You will hardly spend a couple of ₹100 for a 64 GB thumb drive. It's not all that expensive. Download and save as many days data as you can. Mark high volume data points, high volume transaction points on each and every file of each and every counter that you trade. I have shown you the Nifty. Don't let me stop you there. It could be individual stocks. It could be commodities. It could be currencies. Currencies, of course, are not traded right now. It could be any tradable security whatsoever. Now that the data is available to you, now that you're opening a third eye and getting a third dimensional view of a market which you did not have earlier, would you really want to worry about how many days of data to store because it'll occupy a couple of kilobytes of space per day? I don't think so. But if at all you really want to be going on a shoestring kind of package, I think a minimum of 1 month or 20 trading sessions data is something that you need. Mark the high pressure points on each day and maintain it as a straight line. Unless the price goes above it, a rally is not possible. And whenever the price is coming down and bouncing off from a particular level, unless the price breaks below it, a decline is not possible. I can't break it down for you in any more simpler terms. It's deceptively simple, so some people might say it's too simple. Will it really work? I leave it up to you. Some of the most beautiful things in life, including life itself, is simple till we complicate it. Friends, I hope you like this video. I hope I've satisfied all the questions that you have asked me on my social media accounts. I have a request. Please share my videos with as many people as you can to help me reach out to a wider audience and spread the cult of knowledge-based investments and trades. If you haven't already subscribed to my YouTube channel, please do so and click on the bell icon to receive instant alerts about fresh videos being uploaded here. In the comment segment, do let me know how my work helps you become a better trader and what else you would want me to record in the future. I thank you for your patience in being with me in this video till we meet in my next. This is Vijay Bhambwani signing off for now. Take care. Have a profitable day ahead. Bye bye.